going on right now? Let's get to Guidestone CIO Brandon Pizzurro. He manages $23 billion in assets. Are you buying on a day like this? People say buy the dip because they come few and far between. This is quite a dip.
It is quite a dip. Thanks for having me on, Liz. It's certainly an opportunity for people to kind of think about repositioning within their portfolio. As you mentioned, the bears have their claws out. There's a lot of red on the screen. It's a tough day for Wall Street, but the S&P is still about flat for the year. So that really presents opportunities for people that are looking to maybe leg into something that's run a little bit past where they might have wanted to initially get in, gives them an opportunity to reassess. And it also reminds people that markets go down on occasion. So it's a healthy reversal as people are really trying to figure out a lot of these unknowns. Of course, AI disruptions kind of big, the big topic du jour for the day in the last couple of weeks. So people are grappling with where the bottom is here, but it's probably fairly shallow.
Well, this is no small chunk of change that's slamming the S&P down 111 points at the moment. So that really gives you a sense of the broader market getting bruised at the moment. That is a loss of about 1.6%. You just said this is the time for an opportunity, maybe. Where?
Sure. I mean, you got to rotate into some of those areas where you might have been picking or nibbling at. Overwhelmingly, investors are still really overweight tech. I mean, we know that to be the case. Obviously, that's where all the gains have been. There's a bit of FOMO, so people have been piling in there. But there's other opportunities for people that really need to think about where can I broaden out, right? Earnings growth has broadened out, so why shouldn't your portfolio also do so? There's certain areas in financials, in particular like capital markets stand to benefit, we think, from some areas of the pipelines, right, for all institutions. Industrials can be an interesting opportunity. One stat I'd throw out at you, 55% of global PMIs are in expansion, higher domestic PMIs here as well. So that just lends credibility to finding other places to park your money as you're looking to continue to see some of the tailwinds in the broader S&P movement for the last couple of years.
So here's the thing about buying tech on a dip. So Palantir, which we have people who correctly advised our viewers starting about 2 years ago to buy Palantir, and it has been an incredible stock since then. However, we're at $129 a share. Back in November of last year, it was more like 207. But people who thought, oh, now, let's see, it was in early January, it was 194. Let me buy it at 194. They're not in the money. It's 129. So can you give me a sense of how people like you assess whether now is the time to pounce?
I think this is where you need to continue to spread your bets out. And I think that's really where a lot of people start to get tripped up. They have one name, one narrow even industry within a broader sector that they really get, fall in love with, so to speak, pile more and more there, right? If you like it at 90, you like it at 120. If you like it at 120, you like it at 150. But that reverses in the other way around as well. So it's harder to have that discipline in deploying capital when things are going back down like this. But this is, again, where as you see more volatility, you mentioned earlier, the VIX is spiked up. You need to start spreading your portfolio out just a bit more. And so that's where you should start thinking about, where am I underweight? And it's not always just what's the most, kind of beaten up part of your portfolio, but where are areas that have been underweight for a while that might be showing signs of life? Areas like even real estate, right? It's still very much very early signs that they might be seeing some green shoots. But thinking about some of those areas really kind of starts to give you a better sense of where should you be capital allocated for the long run.
Well, Russell 2000 started off the year looking good. Today, it is the worst of the majors, down 2%. Brandon, as we continue to just pick through each and every point with the markets, thank you for your perspective. People really appreciate getting inside the mind of somebody like you with $23 billion in assets to figure out how does he do what he does, especially on a day like this. So thank you. Folks,